Hello, everybody. Thank you for joining us. If you're watching us on YouTube, make sure you hit the subscribe button so that you always know when we drop the recordings for every webinar that we do. Thanks a lot to the Start Engine team and to Scott for joining us as well today. We constantly get questions in our Slack community about equity crowdfunding and just, people looking for different ways to raise money. I think probably most people are aware of how tight it is to raise money in VC now. Like there is investment, but a lot of it's going to those kind of like sure thing investments, like, brands that are hitting 25, 50 million and they get good valuations. But for early brands, it's been really tough. And so we're pretty happy to have partners like Start Engine and be able to just, at least share the info about what else is out there and help everybody understand the options and whether it might be a good fit for them. So I'm pretty much just going to pass it over to the Start Engine team. And as we go through, if you have a pressing question, put it into the Q&A. And then otherwise, we'll just kind of use the chat for some fun stuff. So over to you guys, Start Engine.
Thanks a lot, Daniel. Appreciate you having us on, and thanks for everyone who's joining. We'll do some brief introductions first. Scott, I'll let you go. So we have Scott Hansen here from Island Brands, who has a lot of experience with Start Engine in our ecosystem from a couple different sides. So I'll let you jump in and introduce yourself, Scott.
Yeah, I'm Scott Hansen. I am the former CEO of Island Brands USA and the current CEO and founder of Maverick Brands. Um, we did two campaigns on Start Engine, and about 8 months ago, sold the majority of Island Brands to a private equity firm.
Great. And I'm the director of fundraising here at Start Engine. We're one of the largest equity crowdfunding platforms in the US, helping startups raise capital from the general public. Prior to coming over to the startup space, I was on the debt capital markets team at JP Morgan, originating and syndicating really large debt transactions for public companies. And for the last 3.5 years now, I've been leading conversations around deal structuring, diligence, and overall fundraising strategy for the brands that we work with. So we'll jump into things, and I want to talk through a few points, both structural as well as strategy around equity crowdfunding, and bring Scott in to get his viewpoints and his really valuable experience from multiple sides of interacting with the industry. But just briefly on exactly what equity crowdfunding is, because it's still a relatively new and unknown avenue of capital raising, where the main differentiator is it allows you to raise capital online from anyone in the general public. You're no longer restricted to raising from only institutional investors like VC or private equity or accredited angel investors. Equity crowdfunding is open to both accredited and non-accredited investors. And we tend to see the terms of these raises be quite founder friendly. So as opposed to giving away what you may traditionally to a venture investor, preferred equity with a liquidation preference, voting rights, and a board seat, through the crowdfunding model, most offerings we facilitate, you're selling non-voting shares. So really staying in control of your company as a founder, as long as you can reasonably justify a valuation, you determine what that valuation is for the raise. And specifically within CPG, which has actually been our most popular and highest raising industry on Start Engine to date, we see this really unique alignment of turning customers into investors and investors into customers. And through conducting a marketing campaign around your crowdfunding raise, building brand ambassadorship at the same time you're raising capital. And Scott, I'd be interested in your thoughts when you were first exploring equity crowdfunding for Island Brands. What initially drew you to the industry or got you sort of looking at it as a path to raise capital?
When we initially looked at equity crowdfunding, it was through the lens of trying to create awareness for the brand. We had just come off the heels of a successful Series A, where we raised $2 million through Reg D. Some of it was institutional, and some of it was fans of the brand, but through accredited investors. We had started a Series B, but realized after exploring, what equity crowdfunding was all about, that there was an opportunity to really create an outsized amount of awareness for our brand. And we looked at it more as a marketing opportunity to really expose the brand and find our community, and ultimately let that community vote with their dollars and see if they were willing to come along for the ride with us. And it was pretty incredible.
Mm. I think you make a really important point that a vast majority of the most successful CPG raises we facilitate are doing equity crowdfunding or viewing this just as much for those ancillary marketing benefits and brand uplift as they are the capital they're bringing in and raising. And if we go to the next slide, I'll just to contextualize what we're actually talking about for people. The specific regulatory framework that we operate under, they're known as Reg CF and Reg A plus. And what we'll mostly focus the conversation on here is Reg CF, which I like to call sort of the introductory, the initial step to the crowdfunding world, where it's a pretty easy setup process, very minimal upfront costs. We can spin up offerings now in about 2 to 4 weeks. This used to be a much longer timeline. We've become more efficient at preparing these offerings. And that allows you to raise up to $5 million every year as a company, depending on what type of financials you have and whether a CPA has reviewed them or audited them. And we can go into that in more depth. Reg A Plus, which I'll just touch on briefly, is almost the older sibling to crowdfunding. And this has been referred to as a mini IPO by some people in the past, where companies that have had success through that smaller Reg CF exemption and have raised the 5 million they're able to within a 12-month period may look to scale up to a Regulation A plus raise, which is more diligence. You need to actually receive what's called qualification from the SEC, meaning they review and provide comments to your offering materials. But this actually allows you to raise up to $75 million every year. So a larger regulation, typically for later stage companies looking to raise higher calibers of capital. And Scott, I'd like to sort of go to you for this next slide as we talk more about the types of companies that raise through equity crowdfunding and what stage of their life cycle they raise at. We see a really big mix of types of CPG companies and verticals that use us, from alcohol supplement companies like Cheers, who they were doing over 10 million in annual revenue at the time they raised with us, and were really good at engaging their customer email lists as investors. Grady's Cold Brew, that leaned into digital advertising and marketing and their existing brand recognition to raise over $1 million from the general public. And then uniquely, companies like Uncle's Ice Cream, a brand based in and known and loved in Hawaii by the local community there, and giving local Hawaiians the opportunity to invest in and back a business that they've known for years now and grown to love, was a really unique opportunity that they took advantage of. So I'd love for you to speak a little more about the community that you tapped into with Island Brands, and what stage you were kind of at when you decided to use equity crowdfunding, and why.
Yeah, so as you touched on it, there's a myriad of CPG companies that we've seen come to market through equity crowdfunding. For Island Brands, we had a burgeoning community. We didn't know necessarily where those people were, because in the alcohol space, we have to sell as a wholesaler. You have to, as a supplier, we have to sell to a wholesaler. The wholesaler sells to the retailer sells to the consumer. And so we saw it as an alcohol company as a very distinct opportunity to find our end user, our end consumer. And one of the things that we found and really started to develop through our campaigns was targeting certain audiences and communities. And then, with our ads and with our omni-channel marketing, people started investing in Island Brands. And we were able to find our community throughout the country. We had investors in virtually every state. And we actually were able to take that information and really double down on our direct-to-consumer business. So we were able to not only identify who our investors and community were, but we were able to channel that information to drive velocity per outlet at retail stores, and we were able to actually engage our investors in a way that we wouldn't been able to have done without knowing who they were, and that was a huge benefit. And now, since selling Island Brands, the majority of it to private equity, which we would have never been able to scale or do without equity crowdfunding. We now have gotten into the space to help other CPG brands and other brands alike to develop those campaigns and help them, with equity crowdfunding. And I can tell you that the community that's left after equity crowdfunding, those consumer investors are just gold. They're your most ardent, folks that are cheering your brand on because they own a piece of it. And, they're telling their uncle, brother, sister, and in this time of year, one of the things we did with Island and we do now with the brands that we help is we offer giving the gift of equity in these cool brands. And we're seeing a lot of investors not investing in one or two brands, but creating portfolios of brands. I can't say enough about the reach that the awareness has. The way we looked at it is, let's create awareness for the brand. And if people invest in the brand, great. But if they don't, we're still creating awareness for the brand. So we saw it as just a tremendous marketing campaign that for us ended up yielding just under $7 million, which we wouldn't have been able to fuel our growth without that capital and create the noise we did that eventually ended up turning into a deal.
One question that came in from the chat here was, Scott, what do you think Series A investors thought about your decision to crowdfund for Series B? And then I'd also be interested kind of the other way around. How do subsequent investors look at having done a crowd raise before, if anybody wants to answer that too?
Yeah, that's a great question. There's always this, you don't know what you don't know. And people think there's a lot of proclivities around equity crowdfunding that can muddle up the cap table. The reality is that, everybody that invests through the crowdfund is treated as one line item on the cap table. As far as the Series A folks, they had no problem with the fact that we were going out and creating a massive amount of impressions. Look, people can invest in your company, CPG or otherwise, and it's great to have that money to help you, deploy to help you grow. But that's really the extent of what a single investor is going to be able to do. But when you harness the power of the crowd, which in our case was almost 9,000 people across the United States, that is a lot more effective and powerful. As far as the other way around, all of the folks that invested in Island Brands are still today on the cap table, led by a very astute and well-funded private equity company that's driving Island even further. So it's an exciting time for them too.
And one thing I would add on there, especially since your first raise for Island Brands, Scott, the crowdfunding industry has grown so much and gained a lot of validation through this broader downturn we've seen to traditional capital raising, with different stages of VC funding being down 30, 40, 50% sometimes, depending on the stage you look at, since the 2020, 2021 highs. And a lot of those companies that may have historically been part of VC portfolios and received inside rounds from those investors looked to use equity crowdfunding and use it successfully the last 36 months, which has been a big validator for the space. And I think your transition from being on the issuer side of crowdfunding and a lot of the marketing channels you spoke about that you guys used, seeing both a customer to an investor and an investor to a customer with a higher LTV, higher AOV conversion, is a nice transition into sort of the marketing discussion around equity crowdfunding. And I think you're best suited to speak to this now, Scott. with Maverick Brands and the current crowdfunding campaigns you're working on and the conversations you're having, what are you telling companies about where they should be seeking out potential investors, what the marketing strategy is, and where investors are coming from for one of these raises, if we can transition to the next slide?
Yeah. So, the misnomer is that, and we see it all the time. Founders come to us and they say, we need to raise capital. And we want to put out meta ads and, raise, and somehow magically we're going to raise $5 million. It doesn't work that way. You have to have a level of community. First off, if you're a brand and you don't have a community, you need to build a community. So that's first and foremost. There are some brands that we have out there that that aren't paying attention to their community, and crowdfunding really, when you develop a campaign, you have to be very fastidious in understanding who you're going to target. And so, there are things that we do at Maverick Brands to help drive those opportunities and make sure that they're being taken advantage of. We've done this many times, and we developed a very disciplined roadmap and playbook that really starts pre-campaign. And so pre-campaign, we really go out and identify who those customers are, and we create lead gen around looking for investors that could be interested in investing in a company. And the longer we are able to do that lead gen, the better equipped the brand is when they actually launch. We recently launched a brand that is currently raising on Start Engine called Orange Toucan, and we got almost close to 10,000 lead gen. Investors interested in investing. So when we actually opened the campaign, there's a lot of momentum that came with that. And then, of course, there's an incredible investor community at Start Engine that, look, Maverick Brands is platform agnostic. And so we work with other platforms, but I liken, and I tell all my founders, Start Engine is like the hurdle that you want to, reach if you're going to do equity crowdfunding, because the reality is it's where all the investors are. If you can reach those hurdles and get the momentum that you want to get with your brand, Start Engine's the platform that can foster it well beyond, where you probably thought you could take it. At least it was for us. And, obviously there's a lot of new investors that we want to go find, and we do that by creating awareness. So, the awareness that we put out there for brands might be about a better for you proposition for their product, a cool lifestyle overlay, talking about the product itself. We don't necessarily talk about, just invest in this brand. We want to talk about the brand as a whole. And we find that the best performing crowdfund campaigns are those campaigns where the founder speaks directly to the investor and speaks from the heart authentically about their brand, why they started it. Look, every founder that starts a CPG brand, right, had this idea that they wanted something better, either for themselves, for their community, or both. And the reality is you're up against conglomerates that have a ton of dough. And, for us at Island Brands, we were competing with Anheuser-Busch that spent $7 billion in the domestic US the year prior. So, you can't buy that much TV, but you can, this platform and this ability to crowdfund is really the ultimate fighting against convention and sticking it to the man. It's a David and Goliath type situation where if you prepare properly, you can make enough noise and build your community. That's the power of crowdfunding, is going to the crowd, finding your people, finding new people that are like your community, and then tapping, these great investors that are already a part of the Start Engine community and ecosystem.
founders have had, and really industry-wide, there's been such a myopic view of how you're supposed to capital raise for decades now. And the disruption that we've seen crowdfunding bring and what you experienced really is that David and Goliath story, where it's an alternative avenue to fundraising where you get to stay in control and you get to control the narrative and the message and make the decisions for how to grow your business on a go forward basis. And it really is this flywheel that is dependent on a founder's willingness to put him or herself out there. And two really important points you made, Scott, that I want to parse out. One is the sequencing of the lead generation, where that initial effort to build the foundation of potential not only customers but also investors you're going out to is critical. And it begins the metaphorical flywheel or snowball that is equity crowdfunding, where initial outreach you do to your existing customers, to your friends and family, people you've been talking to who you would have never thought of as being investors in the past, when they can jumpstart the investment momentum for one of these raises, not only are you increasing your brand awareness and customer AOV and LTV from doing that, but you're also showing a level of social proof from people already investing that triggers this amplification effect from the start engine investors. And it, as you've experienced firsthand, that really is how our community of now close to 650,000 active investors interacts with offerings. Is they're adding fuel to the fire and they're amplifying, they're accelerating the amount that's raised on these platforms, and being able to show we've already raised 400, 500, $600,000 through our crowdfunding raise opens up the additional ability to pull the lever of digital marketing and paid advertising, where not only are you driving traffic to a landing page to convert into investors, but those leads are also converting into potential customers down the road and adding some of that value that you talked about. And I'd like to get your take on the next slide as well, where to me, one of the really beautiful differences when you compare equity crowdfunding to traditional capital raising is that the effort you put in and the time you're willing to take to market and talk to people about your raise. The other point you made that I wanted to parse out was how important face-to-face conversations or direct conversations that founders have with potential investors are. Those efforts are directly correlated to your success in crowdfunding and the amount you're going to raise. Whereas when you compare that to traditional raising with VCs, you may take 100 hours, fly to 10 VCs, walk them through a projection model behind closed doors. But whether you get a check or not is incredibly binary, right? It's going to be yes or no. And we see a much higher degree of correlation to effort and capital raised in crowdfunding. But I'd like to get your take on that.
Yeah, so we recently launched another campaign on Start Engine in the CPG space called Mate Maker, and Justin, their founder, is a really cool guy, Aussie. Has all this really great community that we leverage, but one of the things that we leverage with lead gen is the ability to line up conversations with higher net worth investors to come on to the campaign. And so we're doing that as well. And one thing that I didn't touch on that I think is probably important at this juncture in the conversation is being able to target through rooftop marketing as part of the omni-channel plan, meaning those ads that we put out. There's so many bites at the apple we get from that marketing piece. And one of the things that we did with Mate Maker, with Orange Toucan and several others is, and we did it with Island, which is where we learned really effectively to rooftop market over buyers in retail. So we were carpet bombing, Walmart in Bentonville, Arkansas with our ads. And my contention was, I know who the buyer is in that building, right? But I'm not sure that they're going to get the ad unless we cover that zip code. So we're going to cover that zip code, and we're going to pound ads about our product and about the better for you quality of the product, all the tenets and the brand ethos. And we found it to actually drive disruption in the retail channel. So there, I can't put my finger on, necessarily a particular buyer, but I can tell you that meetings that I was in with Publix, Whole Foods, Walmart, several retail buyers, they knew about our brand because of all the noise we were making through the equity crowdfunding. So there's, and look, we did a lot of behind closed doors in, investor meetings, and VC has been down almost over 8 quarters. VC is almost dead. And if they do get a hold of you, they want control of your brand. They want to be on the board. I'm not diminishing, the ability to engage an institutional investor, but the ability to have a wider base of investors that are driving, your brand forward, not only just with the capital, but we were engaging those community investors to repost about our products. They became our army of people. For Island, we called them Islanders. But for all the brands that we've helped now since and currently through Maverick Brands, we're seeing the same type of engagement. And there's a lot to do post-campaign with those investors as well. The residue of these campaigns is of course the capital, right, to use and deploy. But there's a tremendous amount of benefit for having this community of owner investors that now are along the ride with you to help you grow the company. It's shocking to me that more people aren't doing this. When I have conversations with founders, they go right for the ROI. Like, what's the ROI? Well, I tell them, it's not you're going to lose, it's levels of success. The worst case scenario is you're going to run a campaign, you're going to make a ton of noise, and it's going to pay for itself. The best case scenario is you're going to run a campaign, it's going to make a lot of noise, and you're going to raise several $1 million. So that there's no bad part of that. So I look at crowdfunding as really levels of success for a CPG company that's fighting against some really big forces out there.
It's a great point, and I can't stress enough the importance of the ongoing transparent engagement with your Islanders, with the customer investors, whatever you want to call that for your own company. Because I think a big shortcoming of a lot of issuers that have used equity crowdfunding the last 3, 4, 5 years is it's really the minority of founders and brands that continue to engage their crowdfunding investors. And as part of quarterly updates that we advise and help companies put out to their investors every 3 months, asking, are there buyers in your local community who you would see value in introducing us to? Are there markets you think we should enter into? Is there a retailer in your community you think you could make a connection with? There are these immense network effects that can be realized, but it takes effort and it takes transparency and engagement to realize them. To sort of begin to wrap things up here, Scott, I'd love to pivot back to the Island story and get maybe a recap from you on across your 2 campaigns, almost $7 million raised through crowdfunding. What were some of the learnings you took away that are really important to tell founders exploring crowdfunding or thinking about using it?
Yeah, so it's a full-time job. The campaign is a full-time job. People think that you're just going to get on the platform, it's self-serve. It's the adage, what you put in is what you're going to get out. And the more planning, which quite frankly is what naturally transitioned myself and the team at Island that ran our successful, really record-breaking campaigns. We brought them all over to Maverick when we sold the majority of Island Brands. And it's a great charter in life to be helping these other brands scale and hear all the passion and excitement for all these other brands that are out there that are trying to get their shelf space. And I can't say enough about it's just surprising to me that more people don't know about it. I think over the next 48, 60 months, I think it'll become even more prevalent as traditional funding has gotten really arduous, very hard for founders. The flexibility that this allows, particularly with the marketing component as just a huge benefit. I think it's hard for a brand that really is serious about growing to look away from. As far as I want to go back real quick about the engaging the cap table and the crowdfund investors. I thought maybe we'd have a handful of kind of higher investments, right? 20, 25,000. We ended up having a lot of those, and I would call each one of those higher amounts, that were invested. And a lot of them were fellow entrepreneurs that had already rung the bell in some way, shape, or form. And some of them reached out to me directly, wanting to see how they could help the brand. So there was a lot of benefits that came beyond the capital. The capital really allowed us to scale, but the reality is all the other things were, even to this day, even in my view, even more beneficial. This is the most sophisticated marketing flywheel that's out there today. You can go ahead and go, put ads in Meta. You can do something on television, streaming, events, put radio. Nothing was more impactful than our equity crowdfund campaign. We gave out hats to investors, and I had people stop me in the airport, when I was wearing my hat. Oh, the island guy, I mean, it was pretty impactful in that regard. And to this day, they're still out there, our army of investors buying the products and helping the brand grow. And so, the journey continues.
One thing that I noticed this socially, if you know anybody who ever invested in like Liquid Death, they're wearing the hat somewhere out there. Because I mean, they like the brand, but it also makes them look cool. Like, oh, this person knows something. They got that one right. But they could probably have even invested at a later stage and still be like, look at me, I'm so smart. I invested in this thing. So yeah, when it's going well, investors probably will go out there and rep your brand.
Definitely. I'm sure we'll get some questions on what the overall process looks like and what it looks like to potentially engage with Start Engine. So I'll briefly touch on that on the next slide. And then Daniel, happy to address any of the questions in the chat. We can also pull up Island Brand's campaign page really quickly. And this is sort of part of what Start Engine delivers to companies we're working with is we actually help brands design, develop, write copy for these landing pages where you're trying to drive a lot of this potential investor traffic in the splash that Scott mentioned you make to have a really successful one of these raises. So we can help develop these marketing assets. We can A/B test what these campaign pages look like and what the flow is. So I think it's helpful for brands to get a sense of this. But just to speak about what the process to get going with a crowdfunding raise actually looks like. I mentioned we can spin up one of these offerings in 4 to 5 weeks. A big piece of that is meeting with Start Engine's team. We present opportunities to our investment committee to go over terms like deal structure and what this process and what a successful raise might look like. We'll help draft the legal and regulatory filings for one of these offerings, inclusive of those campaign pages that you saw us build for Island Brands. And then once your offering is live, it typically runs for between 90 and 120 days. And over the course of that, there's ongoing content support, marketing support, compliance, legal support, and cap table management to consolidate all these investors into one line item on the cap table. And as you see that flywheel start to spin and the snowball start to grow and more people get excited about what you're doing, first and foremost, those who already know you as a founder or already know your brand, that is when you'll start to see this Start Engine community of now 1.8 million total people, around 650,000 investors begin to engage with and invest in what you're doing as well, and become potentially those brand ambassadors for you on a go forward basis. So would love to open it up to any questions, Daniel,
Yeah,
if you want
I
to tick
have.
through them, or any
Can you go
final
back?
comments.
Can you go back to that last slide? I have a couple actually. One is like if you're going down this path as, you know, an early brand, where does it all, where could it go take longer with you, or where can it go wrong? What places do you see typically could trip up an early brand? Like we get into the due diligence, but I don't have like my balance sheet actually is not very well done. Now I need to go off and actually like hire an accounting firm to do it. Like what do you see as the things that can really trip up an early brand that might be eager just to get started?
Sure. I think having the books and the accounting in a good place is definitely one of them. And if those are clean and ready to be right prepared and presented according to GAAP, so on an accrual basis as opposed to a cash basis, that piece of the process can be very quick, 10 days or less. If there's more cleanup required and we need to bring in an independent CPA to take a look at things, it could be a 2 to 4 week process. Same thing goes for overall legal structure. Is the company an LLC or a C Corp? Are there enough shares authorized so you can actually go out and sell 1 million shares to raise $1 million worth of capital, for example? So are you prepared from both an accounting and a legal perspective to actually go out and take on new investors? And Scott, you can probably speak to this as well. What were some of the potential holdups that made that onboarding process go more slowly for Island and some of the issuers you work with?
Well, some of the things that you mentioned, I mean, you know, corporate structure being tantamount. A lot of people think that they can, you know, raise on an LLC. Look, it's not as difficult as folks might think. You know, some of the you know, some of the challenges or issues that you come up with are things that you would probably want to know anyhow about your business. So it's good to kind of jump in there and tackle those things. I mean, I looked at it as an opportunity to really tighten up our business. So from an accounting perspective, from a legal perspective, you know, if you're serious about growing your brand, then you would be serious about tightening up, you know, those housekeeping items that you would have to do anyhow if you were going to bring on an investor. If you think you're going to bring on VC money and not have a very tight set of books, or, you know, a tight legal structure, you're kidding yourself. So you'd have to do the same thing in this regard. So it forced us to do a lot of things that we otherwise probably wouldn't have done. But those things ended up proving to be, you know, not just great, but it kind of set a tone for us moving forward, where we kept kind of keeping that level of discipline in our structure, up to the point where we started getting into due diligence once we got our first couple LOIs, prior to selling the majority of the company.
Great. Okay, and then secondly, probably a question that's on a lot of people's minds is, how much does it cost, folks? How does Start Engine make their money? How much do you guys take during this kind of a process? How much does it cost brands? And are there other expenses they should keep in mind? Like, do I need a marketing budget for this?
Sure. Start Engine largely takes a percentage of what you raise. So we take 7.5% of whatever companies raise in the form of cash, and 1% of the raise amount in the form of equity, not 1% in the company as a whole. We also have a flat fee associated with the legal drafting work we do, building your offering materials, and the creative work we do. That's $20,000 split into $3,000 upfront and $17,000 taken on the back end off of what you raise. So vast majority of our fees come off of the actual fundraising amount and aren't paid out of pocket from founders. We're able to launch offerings now with less than $4,000 of upfront costs for companies, assuming legal's in a relatively good place and the books are relatively clean. If there's a lot of additional work needed there, that may lead to additional upfront costs, but it's pretty minimal at this point. From a marketing perspective, and Scott, would like to get your take on this as well. We really see, especially for CPG companies, viewing marketing spend as a reinvestment of what you're raising. So one of the other benefits of a crowdfunding raise is you're actually collecting rolling disbursements or rolling closes from the round, which means you're not waiting for the end of the 3-month raise until you can access the capital that's been invested. You can actually access that on a rolling monthly basis starting about 30 days after the raise goes live. So marketing spend is generally viewed as beginning a couple weeks into the offering as a reinvestment of what you're closing on, normally anywhere in the 10 to 20 or 25% range is what I'm seeing nowadays, but would like to hear what you're seeing as well, Scott.
Yeah, I mean, we started Maverick Brands to help founders with this process and get them the, better outcomes than they normally would get on their own, because we use a very disciplined playbook. And sometimes, founders will look at, engaging Maverick Brands, let's say, and maybe have, sticker shock, if you will, because there's not a cost, they're not ready to spend that money in order to really develop a full campaign. But the reality is you get what you pay for. I mean, it's like that in anything. And, Start Engine does a very good job of helping founders become sustainable in the process. So, once you're effectively raising, you're just reinvesting that money back into the campaign and the flywheel. And look, not every raise is going to be as successful as another, but the ones that are the ones that take it seriously and invest in it from the standpoint that this is a campaign that is opening their brand up to the United States, to a massive pool of people. And that's what crowdfunding is all about. And, it is not for everybody. I think it's for brands that want to accelerate, scale, and grow and are serious about what they're doing. Those brands that are out there that aren't willing to put themselves out there, it almost doesn't make sense to me. If you're a CPG brand, you want to make as much noise as possible so somebody comes along and buys you, or you get big enough where you create enough profitability. But the model itself really feeds itself once you get rolling. But we're also very judicious about ad spend. We won't spend money on ads unless we know that there's going to be a return on those ads. And that's where, founders really get a lot from Maverick Brands, because unless you're already have done that, I liken it to like climbing Mount Everest. If Mount Everest, is that really successful $5 million crowdfund campaign, and we've climbed it many, many times, we're your Sherpa to bring you along. And I feel like Start Engine's look, we work with other platforms. Start Engine does a very, very good job of providing a white glove opportunity for these founders.
So let me just jump in and ask a couple of questions on that. So first, do you need to hire somebody like Maverick Brands to do a raise on Start Engine, or what do you get for the $20K fee versus what do you get when you get, if you had a consultant, for example?
Yeah, I mean, I can only say, because we're helping a lot of brands with this process, and we're providing a tremendous amount of coaching and services around it. It depends on what outcome you're looking to get. Those brands that have really strong internal marketing teams, they even have launched on platforms like Start Engine, and have found that connecting with a Maverick Brands is a better opportunity, because we've actually had a lot of brands come to us that have already had successful campaigns but want even better outcomes. So you can go it alone, but it's like self-inflicted surgery. I wouldn't necessarily take it on yourself. It's also a lot of work. So one of the things that's important to know is that you have a business to run, and a campaign
Yeah.
is a full-fledged, business in and of itself.
Okay.
And so that's what's important.
I gotcha. And Harrison, do you mind just answering that as well?
Sure. I think to Scott's point, the largest cost to consider as a founder is probably bandwidth, right? And how much time you need to dedicate to make this campaign successful, but at the same time run your business and ensure your business is growing successfully. So a lot of the support and what Start Engine charges for in terms of what we provide is related to taking the upfront legal and filing and document preparation work out of founders' hands and taking creative work out of founders' hands and building that. And then above and beyond, access to our investor base that we've built up and curated over the last 8.5, 9 years now, having raised close to $1.4 billion for companies.
Okay, cool. All right, just a couple like rapid questions I'm going to give you here. So you just covered a little bit about what the 20K fee includes. That was one of them that came in. Okay, another one from Chris is companies are different in terms of revenue. Like what's kind of the low end for revenue or amount of equity that you're seeing people use the platform for?
Yeah, I think revenue, we're probably not the right fit, or you're probably not at the right time to launch an equity crowdfunding campaign if you are pre-launch as a brand or have just launched. I really like to view crowdfunding and how Start Engine slots into the industry as growth equity, where it really is a dual purposed marketing and capital raising campaign. And it's important to have some existing level or foundational brand awareness and affinity that people have for your brand to use as a stepping stone and launch off of for your raise. Percentage of equity that companies are giving away, our typical raise, what we generally focus on is in the $750,000 to $3 million range. And that varies based on industry in terms of the percentage of the business it represents. But I would say it's generally in the 5 to 15% range.
Okay, got it. Another question that came in, like, do people ever do this kind of piecemeal? Like, would you need to throw the whole thing out there at once, or could you do it in stages? Like, maybe, and then if you do a second round, you have to pay the whole fee again, or do you see companies do that with you?
They can do it in stages. Over 50% of our issuers now actually come back for repeat raises. So it's very common for companies to crowdfund once, crowdfund again. There are reduced fees for repeat issuers. You can also, within the same raise, take it as a piecemeal stepping stone approach, where under the regulation, you're allowed to raise up to the first $124,000 with just what we call self-certified financials. So the CEO of a company self-certifying their books, saying these are accurate, raise up to 124K. Once that level is hit, or you're getting close to that level, you can have an independent CPA review your books in the background and file that as an amendment to the offering. That allows you to increase the raise goal up to 1.235 million. You can do the same process, similar, as you hit 1.235 million, you can get audited financials done, file those as an amendment to the raise, and increase the goal upwards all the way up to 5 million. And you can raise up to 5 million every 12 months with audited financials. So you can take more of a piecemeal approach where you almost tranche the raise out and gauge, use it as a litmus test, right? What's my success in this first tranche? Okay, this is going well. Now I can justify an investment in increasing the raise goal, lather, rinse, repeat.
Okay. And guys, if you have more questions, just drop them in the Q&A, please. And I think we're getting to most of them. So next one, like if you have a GoFundMe or I don't know, something like that, they're like, yeah, maybe set the goal as low and then blow it out of the water and everyone will be like, wow, it's so good. So like, what's the guidance that you give people around where to actually set the target? Should it be exactly the amount that you want to raise, or should it be lower? So that it looks like, you just crushed it for your brand and just for the amount that you actually want to raise. And how long should you actually set the window for raising?
Sure. I'll answer that in reverse. By default, we set campaigns to be live for 3 months. 90 days, you can amend to extend that offering to be live for longer. And I would say most companies are amending once. So average raises are between 3 and 4 months long. The stepping stone approach that I talked to, that actually has the benefit of showing an oversubscribed offering. For example, you can set your initial raise goal at 124K with self-certified financials. You can raise above that, and the invest button on an offering will actually switch to join the waitlist. So there's this marketing sense of scarcity and fear of missing out that can drive more investors to the raise. And then you amend it upwards to 1.235 million. You need to be careful from a regulatory perspective to make sure you're not intentionally setting a low raise amount with the plan of increasing it just to potentially like mislead investors. But because of those thresholds you're allowed to raise up to with different levels of financials, that allows you to create this sense of scarcity while still staying compliant.
Okay. One more question. Does it only work for US companies, or can Canadian companies participate? Other
So
foreign?
right now, Reg CF is restricted to only US companies. Regulation A plus is open to Canadian companies. But I think in the history of Start Engine, we've only raised for one Canadian company under Reg A. It becomes quite nuanced and complex, and we need to evaluate that opportunity on a case-by-case basis.
Great. Okay. I think what's the maybe just the last one here that I've seen is, how long typically does it actually take people to hit the goal? Like, okay, it's open for 3 months, but like, what do you really see? And I don't know if you have a stat of like percentage of companies that actually hit their goal or something around that.
Yeah. Scott, do you want to take first stab at sort of timing of raising?
Yeah, I mean the best raises that we've seen in campaigns that are very successful in the first 3 months are the ones that take the pre-campaign phase and do a lot of the work pre-campaign. So lead gen, building the community, making sure that the campaign page and all the ads are laid out. One of the things that drives a lot of success is time-based bonuses, and Start Engine has a whole, kind of in the box opportunity for founders to tap with regard to perks and bonuses. We like to see brands launch on Start Engine, hit that $124,000 hurdle, and then go from there. But there's no preconceived tracker, if you will. We want to raise as fast as we can because raises cost money. But at the same time, conversely, the longer the campaign's running, the more awareness you're getting and the more people you're touching in a followership. So as the campaign is out there running, you're collecting followers, and those followers are following your campaign within the Start Engine ecosystem. And it gives you the ability to convert those followers to investors. And the bigger that followership gets, the bigger the raise gets, because you continue to foster those followers into this journey that you've created. So there's no preconceived notions. Island Brands launched initially and raised $1,070,000, which at the time was the cap, in 34 days. It cost us $28,000. And it was a 66 ROAS. We don't see that very often these days. We were somewhat of an anomaly because we were pioneers in the space. But we see slow and steady raises over 3 to 6 to 8 months, and have raised millions of dollars in that time frame. But it all depends on the pre-campaign phase and how much work they do ahead of the campaign launch.
I can finish up with just a few quick data points, Daniel. Average raise we see platform wide now is right around $1 million. Most offerings are in that 3 to 4 month range, but we've had companies raise $5 million in 12 hours before. We've had companies that take 3 months to raise $300,000. We've had Reg A raises raise 25 million over the course of a 12-month period. So it drastically varies. But crowdfunding transparently is an industry where it's an 80-20 model. And 80% of the capital raised and invested tends to go to and be driven by 20% of the companies raising at any given time. And that initial momentum, the first 1 to 2 to 3 weeks of our offering, if you're able to lean into the marketing and commit to putting yourself out there and do a lot of that pre-campaign foundational setup work that Scott talked about, you will be positioned to break through the noise and be one of those offerings that's in the top 20%, that's getting the most eyes on them, the most traffic, the most followers, and ultimately the most investors.
Okay, makes sense. A couple other quick fire ones. Can non-US citizens invest?
They can. International investors can invest. Two weird nuances. We can't accept Canadian investors at this time. Their crowdfunding laws haven't been aligned with those of the US, and we can only accept accredited investors from the UK.
Okay. And then what kind of analytics or feedback can people get from Start Engine during, after a campaign to try to learn, like refine your strategy?
Feel free to speak to that from the marketing perspective, Scott, and some of the data we provide on our issuer dashboard now.
Yeah, the data is very robust. I mean, this is one of the coolest things when you're a brand that you launch in the crowdfund campaign and you're getting all these data points, not just where your investors live, and who they are and demographics, but there's a treasure trove of data that you get from these campaigns, and it tells you who your audience is. And we dovetail that with Maverick Brands and Start Engine, with metadata and also audiences. One of the things we've done is collect the lead gen and the investors of every company we help. So as we go to the next raise, we have even more power to harness through the crowd.
Okay, cool. All right. So I think that just about covers it. My guess then, Harrison, is like if people really want to get some more tailored advice specific to their business, they can probably just reach out to you, Harrison at startengine.com, the startengine.com/raise capital. And then you guys can probably give them a little bit more customized advice based on where they are in the progress of a business, a growing brand, in terms of, are they okay on revenue size? How much, could they potentially raise based off some of the stuff that you guys have seen?
Absolutely. And we're happy to make introductions to Scott and Maverick Brands, his team over there as well, for companies and issuers looking for assistance on the marketing side.
Okay. All right. I've just dropped the link here for the recordings as well, youtube.com/@Startup CPG, in case you want to access this recording later. And thank you so much to the team here, and definitely reach out if you guys have more questions.
Thanks for having us, Daniel. Thanks, Scott.
All right.
Thanks for having
everyone.
us, Daniel. Cheers, everybody.
Bye, everyone.